Hello, good day. My name is Hussein and I'm Forex Optimum Broker Financial Analyst. I am back again to bring you new updates in the financial markets. A magical ending of the week with Good Friday celebrations in Europe and in the United States amid low liquidity. The major magical present of the week is the 4,000 points landmark achieved by the S&P 500 index on the top stock indicator in the world. Incredible all-time record this time of the global pandemic. It seems that investors are navigated with a positive macroeconomic data, leaving behind all the alarming signals of the debt market in the United States. You may easily understand the elegance of their logic as the US administration is promising more and more investment in the American economy in coming years. And it's quite to resist pressing the buy button. What is the most important is not to forget that the vast government spending has the other side of coin, which promotes rising taxes and interest rates. Everything that the stock market can't stand the sight of. But so far, investors are celebrating, and we could see that which may gaze at the economic calendar with the NonFarm Payrolls report today. The consensus of the labor data for March is quite positive. American economy is expected to create 647,000 new jobs outside agricultural sector. Immense numbers that is amplified with the forecasted decline in unemployment to 6% from 6.2% in February. A minor exclusion is the hourly earnings data that is expected to rise about 0.1% and after 0.2% in the previous month. Our statistical modeling confirms these expectations with non-farm payrolls at 602,000 to 628,000, unemployment at 6.0 to 6.1%. Market reaction on the labor market data would be muted. Low liquidity would prevent any significant volatility. So major market instruments are likely to remain on current positions until next Monday. The S&P 500 broad market index is ending this trading week in the vicinity of 4,000 points, but lower than the next resistance level at 40 points. So it would be particularly interesting to see the technical picture of the next week, especially after windows addressing in the last day of March. Oil market is looking tense after OPEC meeting on Thursday. The OPEC has decided to lift crude production by 350,000 barrels per day in May and June, following additional rise of production by 450,000 basis points in July. This is a middle ground decision which is a little behind disputed 500,000 basis points increase in production each month, but not satisfying for oil producers that expressed concerns over fragile oil markets at the moment, but we could see further amendments later on. Brent crude prices jumped above the resistance level about $64.30 per barrel, but still looking weak with a possible downside to $602 per barrel and further down to the $60 per barrel. Gold prices returned to more reasonable levels at $1,730 per troy ounce after a brief spike below $1,700 per ounce. Declining yields of 10-year treasuries to 1.68% help gold to regain ground. However, rising interest rates and the pressure on gold prices may resume shortly considered West government spending programs, as the moment is difficult right now to say where the rebound of gold prices may end. Foreign exchange market has not changed significantly from the beginning of the week, with an exclusion of USD JPY, which finally reached the resistance level of 110.50 and is trying to form a reversal pattern to descend to 106.50. The Euro USD is closing the week between the support of 1.530 and the resistance of 1.1940. The cable is also fluctuating in the range of 1.3610 to 1.3970. Well, that's all for a great, wonderful week. I wish you all best of luck. Stay safe, be happy, and thank you very much for listening. Cheers. Bye.